We have a Mandami special going right now, okay? No application fees. That's a true story. I bought it out of bankruptcy. Property's worth $335 million. We paid $235. And I stacked the difference in Bitcoin on top of it. Are you orange pilled? Did your brother orange pill you? Do you have conviction now? And I'm like, I look at Bitcoin's price every hour, so I clearly don't have conviction. I don't know why everybody thinks, oh, the dollar is going to go away. 81% of all the trades on planet Earth are in dollars. It's not disappearing. Maybe Bitcoin fails. I don't know. That's why we put the two together. If I lose the Bitcoin, I at least got my real estate.
Thanks so much. Good afternoon, everybody. Thanks for joining us today. Some of these gentlemen you already know. I'm going to really quickly allow them to introduce themselves. We'll dig into the topic of the panel and talk about some high-level overview things and then drill down. So first up, we've got Mr. Grant Cardone.
I own a company called Cardone Capital, and we have about $5 billion worth of real estate. We also started a real estate Bitcoin hybrid fund this year. We have 5 of those now, about $1 billion worth of real estate, multifamily, cash flow positive day one. Comes with about a 35% depreciation to our investors, and then we add about 35% Bitcoin to the asset. We're taking that company public here either end of this year or next year. I think it's going to be a great solution for any digital company that maybe has a treasury focus but no assets and no cash flow. So we have tremendous cash flow day one. Customers are already paying for the real estate. We've orange pilled a lot of people, probably 1,500 investors this year. Never explaining the Bitcoin. Like, my Bitcoin audience is completely vacant of any data. They're just getting the real estate that they understand with some Bitcoin that has some upside potentially. But after that couple panels ago, I'm like, okay. I mean, the whole 40 minutes, I'm like, I'm losing all my money right now. So,
CJ.
CJ Konstantinos, People's Reserve.
Jay Bose, I'm CEO of PrivateKey Capital and also the Bitcoin Benz Crypto Clubs. So we started as a grassroots organization to educate people on Bitcoin, but soon we have, become an investment team as well, and we just recently bought a credit union in El Salvador where you are allowed to custody Bitcoin in a banking regulated financial institution. And over the last 7 months, we have developed the architecture and the platform. And last week, we did the world's first Bitcoin transaction from Washington, D.C., cross-border, on-chain, directly into a regulated financial institution as a deposit into our credit union called PrivateKey Capital. So that's our claim to fame. It's written on the blockchain. It can never be erased. It's the first financial transaction into a regulated institution.
That's almost a round of applause. Yeah, for sure. Incredible work. And as I was saying to you before, we need gentlemen like you and men and women to lead this thing forward, and that's a beautiful way to do it. Hi, everybody. John Devine here. I'm from Blockfills. Blockfills, we're an institutional market maker and liquidity provider. We started off serving hedge funds, Bitcoin mining companies, Bitcoin whales, but now we're seeing, I think the largest, the growth of our client base is from family offices, actually. So family offices are coming to us kind of for, some insight on the market and how to get into Bitcoin, and I'll talk about that on the panel. Also, these digital asset treasury companies are becoming big players as well. My background is in precious metals markets and volatility markets in Chicago. I made a market there, and I'm taking all the stuff from precious metals and applying it to Bitcoin. Oh, and I wrote the book on Bitcoin options, which I think I see, thank you, and I think I see some books around there. If you want to talk to me about Bitcoin options after the panel, come find me.
All right, so before we start digging into the content of the topic here, I'm very curious about the people that we have here right now. How many of you, and please don't be shy, how many of you would say that you have a fair understanding or you think you have a fair understanding of what Bitcoin is? Okay, about a third of the room. And how many of you barely understand it all, would like to learn more? Couple. And then the other third is just like, whatever. Okay. Fair enough. The topic of our panel is to basically how do you integrate digital assets, considering the more traditional assets you might have seen. So like real estate, art, gold, things like this, things that many of you are probably very familiar with. What's happening right now is that this whole digital asset ecosystem, Bitcoin especially, as well as stable coins, things like USDT, they're starting to present what is looking like very disruptive technologies and rails that the world really has never seen before, and the world is having to adapt. So that combined with like AI, what's coming with robotics, creates a situation where if your intention is to manage wealth going forward into future generations, you may need to start thinking about how this stuff is going to impact you and your financial, your traditional financial investments. So all that said, if we can start with sort of a high-level overview from each of you guys, or your view, do you see Bitcoin as sort of a temporary thing? Is this a fad? Is this something that's like gained a bunch of momentum? Or do you have conviction that Bitcoin is going to succeed long-term?
I was in the restroom and a guy asked me, he's like, hey, are you orange pilled? Did your brother orange pill you? Do you have conviction now? And I'm like, I look at Bitcoin's price every hour, so I clearly don't have conviction. Now, but I don't think it's going away any more than the U.S. dollar is going away. The U.S. dollar is not going away. I don't know why everybody thinks so. The dollar is going to go away. 81% of all the trades on planet Earth are in dollars. It's not disappearing. All the other money is garbage compared to ours. We're the greatest country on planet Earth. We have the best opportunities on planet Earth. If you're a young person and you live in America, you have more opportunities here right now than you had 30 years ago. So this is a great game. Now, whether you trade in dollars, like if I was a kid, I'm going to go hustle dollars, take the dollars, and buy Bitcoin. And I just, I've been doing this as a real estate person for years. Like hustle a dollar, get a dollar, and I'm trying to improve the value of the dollar. And I don't understand the stock market. It's not going away. The stocks will go away, but the market itself, the marketplace won't go away any more than Bitcoin's going to go away, or the blockchain. And maybe Bitcoin fails. I don't know. That's why we put the two together. If I lose the Bitcoin, I at least got my real estate. And if Bitcoin's a real thing, maybe it is. It seems to be. It's better than gold. I'm 67 years old. I've never owned a piece of gold in my life. I've never had anybody offer me a piece of gold. I've never thought about, okay, I got to give somebody gold to trade something. But so I think it's going to be here for many, many years.
Thank you. CJ, I see you over there shaking your head.
Out of love. Yeah, I mean, when I started buying Bitcoin at $150, it definitely could have disappeared. Yeah. There was a lot of risk there, a lot of network risk. But what we've seen is the maturation of the marketplace. And what we're watching happen is actually fascinating to see it happen so quickly. Because we look at the world and how they transitioned through money. And we went from yapstones and seashells to precious metals, and then to currency units, and then to banking systems over the course of thousands of years. But what we've seen in a very short period of time is a new engineered money break onto the scene. And already we are seeing the monetization of the asset class. And what do I mean by monetization? Well, we're turning a speculative asset into a real world money. That is a really important concept, and it's happening at an accelerated pace. And then what happens next is the financialization of the asset class. And I think if you look at real estate and what happened to the dollar in 71, they removed gold from backing the dollar, and the genius that is about to speak after this panel, he likes to call it land banking. And what happened is that real estate, it became a store of value. It became monetized. And after it became monetized, when it became a good collateral, it became financialized. And we saw all types of products built around it: home equity lines of credit, second mortgages, all different types of financing options. This is what happens when something gets integrated into the system. So, when we first started, none of that existed. It was the wild, wild west. But right now, I think the way I see it, I call it the 5-5-5 plan. 5 years of monetization, 5 years of financialization, and 5 years of full-on integration. So for these next 5 years, we're going to see companies race to acquire the most precious form of capital in the world, which is Bitcoin. And that leads to the monetization of the asset class. But what comes after that is going to be, and it's kind of starting right now, that's what we do at People's Reserve, and I think that's what Saylor is doing with digital credit. So we see digital credit fully backed by Bitcoin, and we see Bitcoin-powered finance, which is Bitcoin's fusion into traditional financial products. So, preferred perpetual versus a Bitcoin-powered mortgage. And that financialization, the build-up of these products and services around this specific asset class is cementing this asset class within the system. What comes after that, I think, is 5 years of full-on integration. There will not be one balance sheet. There will not be one model of business that doesn't incorporate, some way or another, Bitcoin into it. And you have that 5-5-5. And in 15 years, Bitcoin will have done to finance and money what the internet did to shopping. And it will be a completely different world. Financial services will not be recognizable. That is the rate and pace of adoption that we're seeing with Bitcoin, and it's accelerating.
I'm recovered.
Feel better? Great.
Thanks, Alex. First off, really appreciate being here. And John, Drew, my friend here, has brought together the old guard and sort of the new guard, right? The guys in Bitcoin shoes. And it's an interesting confluence because in many ways, what you guys do, most of you do, is you manage portfolios. What we do is we manage protocols. And what does that mean? It means that we now have a construct. We have a construct called Bitcoin, which has its own rails. So we are essentially able to go into a world where we don't have to trust a counterparty. We go into a world where it's permissionless. You see, when you breathe, you inhale air. You don't ask for permission. When you sign off with a signature on a Bitcoin wallet, you're not asking anybody for permission. When we were sitting in Washington, D.C. on October 28th at 3:28 p.m., why do I know that? Because that's the moment we transferred Bitcoin from Washington, D.C. on-chain, cross-border, across countries, into a native Bitcoin wallet in El Salvador Credit Union. It deposited within minutes. There was no SWIFT. There was no bank. There was no overnight deposit. There was no reconciliation by a clerk the next morning. There was no T+3, none of it. I didn't wait for a person to give me a little rubber stamp and tell me this is legal now, or this is right now, or a piece of paper. Those constructs are over. This was a shot across the bow. This was no demo. It was a demolition of the existing system. And it won't crumble tomorrow, but it's coming. And you guys are the early listeners, at least, if not the adopters, of what is inevitable. There's a sound of inevitability. Bitcoin is a store of value. Saylor has already proven that, right? He's going to be here. What we are doing is we are unleashing that thermodynamic energy that is stored in Bitcoin. Without selling it, we can do credit for it. CJ is going to build us stable coins based on Bitcoin reserves. We're going to create yields that based on all kinds of different instruments. So when you go from a $2 trillion to $3 trillion market, which is the store of value, this is the mathematical fortress. It's built on math. I have thousands of mining rigs all around the country and the world, from Dubai to Guadalajara to Texas. And when we mine Bitcoin, it's energy. You know, most people think money is little digits on your screen. It's not. Money is your labor. Money is your effort. Money is your energy. It's your trust in the system. That's what money is. And Bitcoin has a very low surveillance surface, as they call it. You know, it's cryptographically encapsulated in a SHA-256 function. You don't need to understand how your iPhone works. You just use it, right? Same thing. Understand that there's a tremendous amount of mathematics which has never been hacked into, never been cracked into, never been broken. And once you put that energy, your energy, into this thing called Bitcoin, it lives forever. As long as you don't lose your keys, it's yours. No bank can take it if you self-custody. And in our bank, we have actually patented this. We have a multi-key system, multi-sig, it's multi-signature wallet, but you actually have your own wallet. There is no central Nostra Vostra account where all the Bitcoin go in. Each wallet is tied to your savings account. And this money, you can see it every day. You have the keys to it. It's yours. We always say in Bitcoin, your keys, your money. There is no one custodying it. There's no bank telling you, oh, gee, you spent too much money putting gas in your SUV, so I'm going to hold back and not let you use your PayPal account. That doesn't happen. You see, it's freedom money. And once you start to understand the difference between the Federal Reserve and 12 guys in suits sitting and deciding what to do versus the market and the people deciding what to do, the equation changes fundamentally. So Bitcoin is here to stay. There are new products that are going to be developed. And yes, I do not expect the banks and the financial institutions to come up with the innovative new products. It is us guys who are going to develop it, we'll prototype it, we'll get it into the market, and then that'll be replicated across thousands of different financial institutions. So yes, I've had 20 years in Silicon Valley, and I know software, and I trust software more than I trust in humans. So here we are.
Yes, yes, yes. I had a hard time controlling some of my emotions there because you're spot on it. And so the question for us up here is, how do we generate that aha moment? And for me, it was, I have a background in energy systems. And so I started digging into Bitcoin, and I'm like, okay, pristine collateral, pristine collateral. Why is this pristine collateral? Everyone keeps saying this word. If you're going to write anything down from what I say here, I would say write down the double spend problem and write down the Byzantine generals problem. These are two extremely difficult computer science problems that were being worked on for, 30 years.
Don't forget the Austrian economists.
Well, of course, we need the Austrian economists to support us in our thesis. But these two computer science programs were tried to be solved for 30 years or something like that before Bitcoin solved those problems. Satoshi solved these two extremely complex computer science problems that allowed us to have Bitcoin, and that is why it's pristine collateral, because they solved those issues. And go do some research on your own time. I'm not going to get into the details of those problems here, but once you read about those things, I think you'll have a little bit of a light bulb if you're still looking for it. And then, kind of going on what you said about money and energy, money is human technology, and it stores and transfers human time, energy, and effort. If you want to debate me on that, I'm happy to. I'll be outside. But I've been thinking about that question for, 15, 20 years. What is money? Why are we going out into the world every day and expending ourselves? In return, we get these things called US dollars. Well, we're giving away our humanness for these dollars, right? But then you start to ask the question, what's a dollar? And then you begin to realize that dollars have fractured the laws of thermodynamics. Energy can neither be created nor destroyed, only transferred. And these people are creating dollars out of thin air, and they're asking you to give away your human time, energy, and effort for pieces of paper. Think about that for a second. So we've busted the laws of thermodynamics, and we're basically in an indentured servitude society, giving away our time on this planet for pieces of paper that are being created out of thin air by some guys in an ivory tower. That's crazy, and that's why Bitcoin's inevitable. Because once people figure out that these pieces of paper that they're giving away their humanness for are worthless, we need money that's based on the laws of thermodynamics, and that's what Bitcoin is.
Can I add one thing just to make it even more real? When we mine Bitcoin, it costs us, the power cost, it's cost me $48,000 to make one Bitcoin. I pay those bills every month. That's the cost of energy, which is being converted into this digital product called Bitcoin, right? When you print paper, there is no such cost. This is conversion of energy into a digital currency, which is real. It's the sound money. When you print something with nothing, it only buys you illusions, which is what paper money is. Whereas this is based on actual energy conversion, which is why, by the way, we won't get into it right now, but the convergence of energy, mining, and banking is a triumvirate that's going to start to happen. Future companies, actually the Bitcoin mining companies will become the treasuries. This is where Bitcoin is minted. That Bitcoin becomes the digital capital for the bank. And that digital capital converts into digital credit. And that digital credit produces cash flow. That cash flow goes back into mining and energy creation. And that is a regenerative process. It's a nuclear reactor called Banking 2.0. And that's what PrivateKey Capital is going to be building as a prototype, a vertically integrated stack where energy, mining, banking tied together into a comprehensive model, which doesn't exist today. We have to prove it out, of course.
Let me hop in here because I feel like I agree with what Grant said. The dollar isn't going anywhere, and governments are not going to give up their ability to print the dollar, and other governments are not going to give up the ability to issue debt. Like, I don't see that happening ever. But I do believe we are working towards that future, and it's going to be a better system that empowers the user by delivering value, because the traditional system extracts value. But let me see if maybe I can act like a bridge between right here. I just happen to be sitting here, but I'll bridge these ideas, right? Think of Bitcoin as a savings technology, and think of the dollar as a spending technology, right? So when you earn dollars and you need to spend them, you keep them in dollar form. It's a currency. So know the difference between currency and money. Money is a store of value. Currency is a medium of exchange, right? Bitcoin cannot be used for eggs and milk. That's why we have great companies like Blockspaces working on technology that allows for rapid changes and increases in the velocity of money, right? Gold was a great store of value. We needed paper currency units to increase velocity, to promote economic growth. So there are blocks to the technology that make it a bad currency. If you're making a big purchase, okay, no problem. But if you're making small micro purchases, that's not really what a store of value is for. That's what a currency is for. So I see in the intermediate term, a world where we have to balance both of these mechanisms, both of these tools.
Yeah, for sure. So what we've seen so far right here is you've seen the full spectrum of people who are interested in Bitcoin, right? You've got on the far end very impassioned believers in what Bitcoin might promise as a form of money. Also, people who are a little more traditional, looking at it from a little more traditional perspective. So I'm going to actually direct this to Grant, because you're, from what I understand, fairly new, relatively speaking, to Bitcoin. What's got you switched onto it? You don't think the dollar's going anywhere?
I mean,
Why does
this conversation kept me from Bitcoin. Okay, this idea that, like, guys, I exist in a fiat universe. This is money is not useless. I have not traded my humanness for fiat. I have offered tremendous services to the marketplace for 40, 50 years. They paid me in cash. Okay. That's what they had. There's nothing wrong with this fiat thing that we have. Like, it's better than trading donkeys and eggs. And it's better than gold. I don't want to drag gold around with me everywhere, okay? And I don't want silver jewelry to like this is a trading mechanism, okay? Is it perfect? No. Bitcoin's not perfect. Okay, there's nothing perfect about anything. Like, how much can I accumulate, though? How much can I accumulate, and how much can I help other people accumulate in that process? And you know, can I find something? Look, I'm a real estate guy, but I hate the plumbing, and I hate the roof, and I hate the gutter, and I hate the evictions and the termites and the tenants and all that stuff. That's how you got to talk to me. You want to convert me? You got to talk to me about, bro, I got something here. You could add it to your real estate purchase. Real estate's real. It's been around 2,000 years. It will be around 2,000 years from now. Even if you 3D print, you figure out how to 3D print for nothing, the price of the land's going to explode underneath it. So even if you come up with a solution to handle the housing, people have to live someplace, and I cannot live in my Bitcoin. Okay, you know, I've never touched a piece. I can't sleep on it. I can't have sex and make babies. I can't, like, it does everything, guys. Like, it doesn't, like, and when you talk to me about it doing everything, it prevents the fiat universe, the legacy people that would be interested in it from moving into it because it's so radical. So that when we introduce people like, hey, I have a real estate project. It's a $230 million real estate project in Boca. Takes up an entire block. I can show him a picture of it. Has 366 tenants. It's got $10 million worth of EBITDA today. We walked in, there it is right there. People live in it, okay? Bunch of Madami people. We're running Madami ads on this piece of property right now. True story. We have a Madami special going right now, okay? No application fees. That's a true story. It's in Boca Raton, Maine. Started running the Madami ads. We've already gotten phone calls. Hey, if you're escaping New York, no application fees, okay? No communism talk allowed on the property, all right? No taxes, no gun permits. Come do whatever the hell you want to do. Cougars, welcome down to New York. We run all these ads and promote stuff, right? Well, guess what? That is the largest real estate Bitcoin deal ever done on entire planet Earth. Okay, we're 2 weeks from finishing this. I bought it out of bankruptcy. Property's worth $335 million. We paid $235. And I stacked the difference in Bitcoin on top of it.
So you bought $100 million worth of Bitcoin.
Yeah,
as part
about
of this deal.
833 Bitcoin.
And how is this being received by the people? Who are,
Well, this is the 10th one we've done this year, so this has been extremely well received. Okay, we'll end up with about 800 investors in this. 70% have zero Bitcoin, own no Bitcoin. Okay, 50% of them never invested with me. They knew I'd been buying real estate for 20 years, but the real estate wasn't sexy. I mean, it's sexy real estate. That's as sexy as you get. It's as good as you get. It's trophy real estate. But it's like the returns are just boring. They're very boring and stable, but they're predictable. And people understand, 99% of planet Earth understands real estate. They either live in it or they pay for it or they invest in it. And so we put these two together. I met with Mike, my brother and I. Gary's in the room right now. Me and Mike and Gary met about a year ago. And Mike says, you need a public company. I don't have a public company. So I started building these to see how the marketplace would respond to them. And our investor was older, went up about 20 years in age, not younger, older, richer, okay, and half of them had never invested with me because the real estate was boring. And the check size got bigger. And by the way, I don't spend any time on any of this fucking crazy shit y'all are talking about. Like, it's so intelligent. You guys are so intelligent. Like, it leaves me out of the game, right? You need to talk to me the way I understand money. And I don't even understand the U.S. dollar, so I'm not ashamed that I don't understand Bitcoin.
If you did, you wouldn't want to hold it.
Let me jump in on this because I think you make a great point here. What does Bitcoin do? What is the problem that Bitcoin solves? And when you look at the dollar, this is really interesting. And maybe I'll share the answer first. What does Bitcoin solve for? Trust. Okay. Now, what's the problem with the dollar? What's really amazing, and some of you guys know I'm a Bitcoin maxi, and if you don't, well, there you go. I'm a Bitcoin maxi. However, you have to look at the world at how it is, and you have to look at the systems at what they do. If the U.S. government was not spending $2 trillion plus more than they were taking in taxes, in other words, if they were not deficit spending, you know the value of the dollar would actually go up and the economy would experience deflation. So it's not that the dollar is actually shitty or broken. It's that the people and system who are leveraging the dollar are abusing the system and therefore abusing the trust. If we had, I don't know if I can use this word, if we had competent leaders who had economic sense, we could fix the problems like this. When we had an inflation problem after COVID, and the Federal Reserve comes out and says, you know what? We need to fight inflation. And you know how we're going to fight inflation? We're going to raise interest rates. We are going to punish the economy for the sins of government spending. You could have fixed inflation by simply saying, you can only spend as many dollars as we bring in taxes. You wouldn't have had to raise interest rates at all. So there's a balancing mechanism within the system. And the people who are in control of the system are abusing the system. And therefore, I'll just ask you this question. You trust the government more today or more yesterday, right? Where's the trust trend going? That trust trend is going down, and that's what people understand in simple terms. I cannot trust the budget of the United States government. I cannot trust that they are not going to continue to deficit spend. We got to replace, the thing is we don't owe dollar liabilities. We got some knees. We got some hips, and the price of those, they keep going up, and they keep going up radically. And because of that, we have to keep printing more and more money. We might be $38 trillion in debt, but we have over $200 trillion of unfunded liabilities. And that's going to continue to grow as they continue to abuse the currency system. So what does Bitcoin do? Bitcoin says, you can trust me, because it's a mathematical-based protocol. You do not have to trust a human. You can trust the math. And we leverage that cryptography for absolute digital scarcity. And then we tie that scarcity to energy. And then that is what you can trust. So it's the trust component that blockchain itself and Bitcoin, blockchain was created for Bitcoin. Because blockchain it's like an Excel spreadsheet. Why not just use a banking Excel spreadsheet? Because you can trust and you have transparency. So it's trust and transparency. That's the problem that Bitcoin solves for. And yeah, the dollar would work fine if it weren't being abused. But we'd be very naive to believe, after watching all of world history and monetary history, that the governments wouldn't continue to abuse the printers and to extract value. Bitcoin does what nothing else can do by preventing the powers that be from extracting value from you. That's why Grant wants to take that cash flow and store it in Bitcoin, because he knows when he stores it in Bitcoin, it can't be ripped from him. But he still needs the dollars to operate. We still need the dollars to spend. It's a spending technology. But I just wanted to address that's the real solution. It's a trust
I had
solution.
somebody say, "Hey, do you take rent in Bitcoin?" I'm like, I wouldn't even trust the tenant that would want to pay their rent in Bitcoin. I'd be like, go back and look at the application. Something's wrong with this person.
Explain yourself. Why? Why is this?
Well,
No, wait. That was to Grant.
what was
Explain
that?
that. Why is this?
Well,
Why aren't you going to trust them if they want to pay you in Bitcoin?
I mean, it doesn't make any sense, man. Go out and get
Why?
because you can't replace the Bitcoin as easily as you can replace the paper. Look, I don't have a problem with the government printing. I have a problem with the government taxing. Okay, don't tax me and just hit that printer as much as you want. Just don't tax me. I like printing. Okay, print it. I hope Donald Trump prints $10 trillion in March or May of next year. I hope he just hits it and bang, prints it. You know why? Because I'm a hustler. I'm a hustler, and I'm going to be right there at that goddamn printer the day they hit the print button, and I'm going to get my goddamn fiat. I'm going to stack it, rack it, and I'm going to convert it into better assets, and that's the game. You got you family offices, okay? How do I get money? Where do I put it? And how do I multiply it? Because you cannot save it. This idea that you're going to save money is impossible. It has never been possible. It's indoctrination by the banks. Save your money here. It's a great ad. If I was a bank, I'd say save your money here. But it's impossible to save anything. Energy, money, love, anything. You have to create. And so I get it, and then I want to construct something that's bigger and better and that can multiply.
All right,
That's the Bitcoin story.
Inflation is a hidden tax.
Inflation is great.
It's
Inflation
tax.
is awesome.
It is a version of tax.
But I love it. I love inflation. I just don't like both of them. I don't like the printing and the taxes because I feel like I'm at a Diddy party.
Okay, so I didn't see this panel going this way. Let's talk about some solutions and ways you can integrate Bitcoin and digital assets into your portfolios. Just about everybody up here has some product or service that does something like that. Let's talk about the spectrum of it. Let's start out down on the end. Let's go with Jay and then John and come this way.
great. Yeah, just to give you a simple analogy, there's a hole in the bucket, dear Liza. You know, there's a hole in the bucket, and you can't save money in something that inflates out because the government printer's going brr Okay, so if you got a hole in the bucket, you can keep on
Okay.
putting that savings. It
We got
doesn't work.
5 minutes.
All right, all right, all
Stop trying to convince Grant. Leave him alone. Solutions.
Solutions. So number one, we talk about Bitcoin preserving value better than almost any asset class that we know. In fact, we have people who are pulling out money out of their home equity and buying Bitcoin because they believe that it's a short the dollar, long the Bitcoin play all day long, because home equity is going to keep decreasing potentially, or there's a risk to it, whereas over here they're able to take their labor, their hard-earned money, their hard-earned equity, which they have paid for over years and years, and putting it and transferring that asset very simply into a more sound money, right? So that's a very simple product which we have, which our members of our club constantly use and do. So you're holding an asset, you're diversifying your portfolio, and potentially getting an appreciation of up to, if all the projections are what they are, at least 30% a year. So even if you're paying a 5-6% interest to pull the home equity out, you're still making 24%.
Okay, time's up. Lightning round.
All right, so
John Devine,
yeah,
talk to us about
I'm gonna
options.
talk. I'm gonna talk about selling insurance. Okay, so we're gonna sell insurance on Bitcoin. That's what I'm gonna get in here. Let's say you've gotten there. You want to allocate 1 to 3% of your family office into Bitcoin. What do? You can go buy spot Bitcoin. Done. All right, but I'm gonna say, what if you could sell insurance into Bitcoin, get paid on dollars, annualize like 10% on US dollars for the obligation to buy Bitcoin. The exact example I'll talk about is the March 2026 options market, the 80,000 strike put, which is just about the production cost for Bitcoin right now. That's paying 10% on cash. So you sell the 80,000 strike put option, you are now obligated to buy Bitcoin at $80,000, and you get paid 10% on that cash. You can take the premium in Bitcoin if you want. So like when I talk to a family office, I say, look, don't just go buy spot. Come in and sell insurance to the market. I'll pay you a premium for it, and now you have an obligation to buy Bitcoin. And there's no leverage. It's all cash secured. You have the dollars behind that insurance policy or behind that put option. That's my biggest message to any serious investor who's coming into Bitcoin, because it's very easy to chase this market, and that gets you into trouble. The second thing I'll say is, once you have Bitcoin, once that insurance policy obligates you to buy Bitcoin, now we want to talk about liquidity. How do we access dollars from pristine collateral to operate in our daily life against that Bitcoin holding? And so what we do now, we lend dollars against Bitcoin collateral, typically at 65, maybe 70 LTV. And what we do in that case, or what I would talk about there, is buying insurance so that there's no liquidation on the loan. So you have Bitcoin collateral, you're borrowing US dollars, you're paying 8.5%, something like that. You attach insurance to that product so there's no liquidation risk on the collateral. Those are two routes into this market. First, selling insurance. Second, borrowing against it and buying insurance. Of course, we can generate cash flow by selling call options against Bitcoin. Bitcoin is just like any other commodity or stock. You can sell upside insurance, which that's what a covered call is. And if you think about that, when you sell a covered call, you can generate a yield. You can then take that premium to finance your insurance at zero cost. So you own Bitcoin, you borrow dollars against it, you sell a call option, and you pay for your insurance. So those are the three routes that I like best for a family office coming into Bitcoin.
Very good.
That's a no-brainer, by the way. If you're coming into this market with size, get paid to buy. That's common sense. What I see the future of what's happening here is that Bitcoiners will become the risk-free lenders. So if you're looking for exposure, someone like Grant comes to People's Reserve and says, look, I got a luxury property, I need $350 million. We know there's a Bitcoin component there. He's buying it at a discounted rate. He's integrating Bitcoin into the property. That means it's not just the real estate that's securing the loan. Bitcoin is securing the loan as well. And because Bitcoin is an engineered money, and on the earlier panel I was on, turning that duration risk into a duration benefit, I will let this man borrow money as much as he wants, infinity, because he's integrating Bitcoin as a collateral component. That reduces my risk as a lender, and that means when you're looking for exposure for cash flow, you don't want to go to the guy who's going to promise you that this luxury property is going to bring down those people from New York. You want to go to the guy who's going to integrate Bitcoin into the property, and that extra layer of security reduces risk, it reduces cost of capital, and that is really the future of finance.
All right, Grant Cardone, you get the final
No, I
word.
mean,
1 minute.
exactly. In 3 years, in less than 3 years, you will have a model where the debt market will give me a loan. Fannie, Freddie, CMBS loan will give me a long-term 10 or 20-year loan on that asset because I have that much Bitcoin, because it provides liquidity 24/7 on an asset that's not liquid, but the cash flows. You got the two combinations of two superpowers putting those two things together.
Fantastic. Thank you, gentlemen.
Shaping futures, the Naples Family Office Symposium.